On July 7th, 2021, Peabody Energy BTU was up over 20% on the day. The big announcement was Peabody is looking to repurchase over $13 million in 8.5% interest paying notes. Peabody announces offer to purchase up to $13 million in blah 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 of its 8.5% senior secured notes that are due in 2024. Peabody is up over 176% over the last 3 months. This is the latest catalyst in a string of catalysts that have brought Peabody from a lowly coal miner all the way up to the world's largest private coal miner. I'm Jonathan. I bring you the market news in context through the lens of believability so that you can save time, you can trade and invest your way, and you can make money. Peabody's board appoints James Grech as the company's next president and CEO. This move brought Jim Grech, an industry veteran, into Peabody Energy. Glenn Callow had overseen Peabody through some of the down years, the rough years, during which Peabody went through a bankruptcy, during which coal prices initially got hammered because of the focus on natural gas, widespread availability of natural gas due to fracking. The extreme upward momentum of Peabody's stock price has been fueled through quite a few factors, including the rising price of coal, the overall higher demand of electricity, the higher demand of electric vehicles, and the price of natural gas. Additionally, production and output drop-off in Indonesia and China has caused the supply of coal to be reduced. Coal shows its staying power as economic bounce back. Increased demand for electricity and costlier natural gas have stemmed the decline in the price of coal. High natural gas price in the United States has resulted in increasing usage of coal and power sector for electricity generation in the United States. Not so fast as the Motley Fool. Peabody is highly leveraged and have a lot more debt than one might think. They have a very poor debt-to-equity ratio, and they have a history of bankruptcy. Peabody has been struggling to support a heavily leveraged balance sheet with a debt-to-equity ratio of 1.7 times at the end of the first quarter. One surprising sector that may keep coal prices high is the electric vehicles sector. That's right. Electric vehicles require coal. More accurately, electric vehicles and their batteries require rare earth minerals. And these minerals are quite often found in coal. They're found in coal as it's mined, they're found in coal as part of the mining process, and they're also found in coal ash after coal has been extracted and then burned. It may not always be that way, as scientists and technology experts are trying to extract these minerals, these rare earth minerals, from the coal without burning it and releasing all the carbon into the atmosphere. The stock price increase over the last 3 months has been dramatic. However, Yahoo Finance says it may not be over. They believe that this momentum stock is maybe undervalued. Despite fast-paced momentum, Peabody is still a bargain stock. Hedge funds and large money managers usually invest with a focus on long-term horizon. Their point is, if hedge funds are involved, then they're in for the long haul, because hedge funds don't like to change their strategies, because hedge funds are just smarter than the rest of us, of course. After breaking out, we can see here that over the last 3 months, Peabody Energy BTU is up over 170%. Very nice. This brings us to the point here in July of 2021 where Peabody has offered to buy back debt. They have offered to buy back $13 million or so in 8.5% notes maturing in 2024. Looking at the trade-offs involved in buying back this debt, we can see that Peabody had a choice. They could buy back the debt, which they chose to do, or they could buy back some stock, which they did not choose to do. What is the difference? Well, Peabody chose to buy back debt, which means strengthening up that balance sheet, bringing down that debt-to-equity ratio, instead of paying out cash to their shareholders and giving them the direct funds. With earnings coming up, we can see that Peabody is on a tear. Last 3 months have been awesome. They have a new CEO. The demand for coal is high and rising. And it's not just from electricity, it's also from electric vehicle manufacturers and their battery producers. What do we do from here? Because Peabody is so leveraged, it probably makes sense for them to generate value for their shareholders by reducing future risk. They did this by trying to buy back that debt at a high interest rate so that they can take it off the books now and reduce their interest obligations in the future. One more aspect heading into earnings that I think is relevant is to look at the share price and look at how it's behaved over the past few months. We can see that the $10 per share level initially functioned as resistance as the upper level, and then as this resistance was broken, the share price has now bounced off it a couple times as it's functioned as support. If we get a couple down days going into earnings, I want want to know what happens with the support level. Will it hold up? Will it falter? From there, let's see what happens with the stock. It's difficult to judge and weigh the effects of the different aspects of Peabody's recent run on their future expectations. We have the surging coal price and its relationship to natural gas and its relationship to electric vehicle battery demand and electric vehicle demand. We have this also in relation to the lower output in China and Indonesia. We also have the search for an alternative to burning coal in order to extract those minerals. I think in the long run, coal will lose its prominence. The question is, what is the long run? Is it 20 months? Is it 20 years? Maybe it's in the middle. I don't have the answer. I do think that this is the question each individual investor must answer. And I believe this is a question they must answer for themselves. I want to say thank you for supporting the channel. If you have not yet, please go ahead and click that like button. Make sure it activates. That's all I have for you today. Jonathan out. Cobalt and nickel, neodymium, europium, terbium. How did I do? Leave in the comments down below.